If you've been watching Detroit from the outside and wondering whether the window is still open, I'm here to tell you it is. But it's not going to stay open indefinitely. What's happening in this market right now is something most investors have really, outside Michigan, haven't fully figured out yet. I'm going to show you the four zones where smart money is moving, a single corridor that tells you where the entire market is headed and exactly how buyers can still get in before the price discovery catches up. Three, two. Hi, my name is Noah Jackson. I'm a licensed real estate agent, property management owner, and real estate investor based in Ferndale, Michigan, and my brokerage is Simply Home. I built this channel for two types of people: investors who want to know where the real numbers are in Detroit Metro, and buyers who deserve a straight answer about where they can actually afford to live well and build real equity at the same time. This is episode two. Let's get into it. Detroit is no longer a recovery story. I want to say that clearly because the national media still tells the recovery narrative, and that narrative is years behind the reality on the ground. Recovery is about stopping the bleeding. What is happening in Detroit right now is expansion, and there's a meaningful difference. The infrastructure investment is real. The employer base is diversifying beyond automotive, and the single most important indicator, institutional capital, has not fully arrived yet. Markets like Nashville, Atlanta, and Phoenix, institutional money moved in so aggressively that individual investors and first time buyers got priced out within 2 years. This is especially true after the pandemic. Detroit isn't the window that precedes that moment. Here's what the numbers are telling us right now. Metro Detroit home values are forecast to rise 9.5% in 2026, with Detroit proper tracking slightly above 10%. Rental vacancy sits at 6.2%. The apartment starts around 37, down 37% year over year. That is a supply and demand imbalance that drives rents up and keep occupancy high. When I say window, I mean a specific condition. Appreciating values, still affordable entry points, and strong rental demand, all three at the same time. You really get all three simultaneously in any market, and Detroit has them right now. The question is how long that alignment holds. The honest answer is not forever. The four investor zones. Zone 1 is the historical districts: Boston Edison, Indian Village, Rosedale Park, Palmer Woods, Sherwood Forest. These are established, well organized residential neighborhoods with active block clubs, strong community infrastructure, and a price trajectory that most Detroit zip codes cannot match. Here's what the current data looks like. The median sale price in Boston Edison is now around $370,000, with fully renovated and larger homes selling anywhere from 440 to $850,000. In Rosedale Park, the median sits around $200,000, which means a well-located, well-priced home there still represents one of the strongest value propositions in the entire area. For investors buying distressed properties in and around these boundaries, the after repair value story is compelling if you underwrite correctly. And this is where having someone like me come in handy, because you need someone with local knowledge to understand where these lines are, how these numbers correlate, what direction these numbers are moving, and how we can actually incorporate something in our strategy and selling to make you stand out to the competition. This is where someone like me comes in. Zone 2, Midtown, Downtown, and Michigan Avenue Corridor. Zone 2 is the Michigan, 3, 2. Zone 2 is the Midtown, Downtown, and Michigan Avenue Corridor. This is where the long-term multifamily and mixed-use story lives. Average rent in downtown Detroit is now 1855. That's right, $1,855 a month, up from 1845 a year ago. That rental demand is being driven by Wayne State, the Detroit Medical Center, and continued waterfront development, creating sustained need for professionals who want to live close to where they work. If you're a multifamily investor and you're not looking for a 4 to 12 unit building within 2 miles of Woodward and the downtown area, take a harder look. The long-term appreciation demand profile in this corridor is the strongest in the country. And let me tell you, there's way more investment coming in the form of more exclusive hotels. JW Marriott is building a hotel downtown, as well as Michigan State having a cancer center being built, along with the expansion of Henry Ford Hospital, which is right next to Wayne State University. So that whole area, and including Motown Museum expansion, is going to be a really big long-term value add for the neighborhood, and thus could be a potential huge opportunity for you. And right now is the perfect time, right before things start to get a little crazy. Zone 3, surrounding neighborhoods. So Zone 3 is the neighborhood surrounding the historical districts. East English Village, Grandmont Rosedale, the North End, Bagley. This is where you find package deal opportunities and cash flow plays. Entry-level investment properties in these neighborhoods are currently trading in the 60K to 130K range, and many of them renting for 1,100 to 1,400 a month. Appreciation is really here too because Bagley's median sale is up 22% year over year. The North End is up nearly 30% year over year. And I like that particular neighborhood for a lot of multifamily there too. You tend to see a lot of 4 unit multifamilies in the North End. And you'll see in these maps, these pictures I show you in this video, how a lot of these neighborhoods kind of flow. You have these pockets and then the surrounding pockets and then the surrounding pockets. So sometimes the pockets overlap, and that's where you can find the best intersection of purchase price to rent. And once we work together, I'll be able to help navigate your eyes to that. Also, as a realtor with local knowledge, I have word of sales and package deals all the time that come across my desk. So if you want to have access to those deals that come across, you know who to talk to. Also, too, you'll see that appreciation at the pace of the more expensive, more higher class properties at the neighborhood areas, but this one you'll get a healthy cash flow. And the zone 4 is the near suburbs. Zone 4 is the near suburbs in Ferndale, Oak Park, and Hazel Park, and East Point. And so this is what I can speak to directly. So this one is the near suburbs, Ferndale, Oak Park, Hazel Park, East Point. I run my brokerage out of there, and the median home value in Ferndale is about $254,000. Oak Park is about $266,000, up 26% year over year from the last year. Hazel Park comes in around 170K, which is the most affordable entry point in this group and still sits in one of the most competitive rental markets in the area. So for a buy and hold investor, a blend of cash flow and appreciation across these 4 communities is a genuinely rare feature in any metro area right now. So you can look at some place that's right around Detroit in the corridors and get a lot of the appreciation play and the rental play if you're willing to invest more dollars. So now the single most important geographic thesis in this entire market is the Woodward Corridor. The drive from Woodward, from downtown Detroit north through Highland Park, Ferndale, Royal Oak, into Birmingham, and Bloomfield Hills, you'll see a dramatic price per square foot scale the more north you go. So for the north you go, the higher the price. And that gradient is being pushed down from both ends. So the downtown values are rising, the Birmingham more expensive, ritzy areas are holding strong. And the middle of that corridor, specifically Ferndale and Royal Oak, is where the compression creates most of the opportunity for buyers and investors right now. And there's a lot of people who want to live there. There's a lot of new stores and restaurants that's starting to creep up and crop up since the pandemic. So I know that's going to be an area that some folks who are looking for a more stable place where the price point might be higher, but the rental is more stable and the rental quality is higher, that might be an option for you. So for buyers, the case is simple. The price hasn't caught up with the quality of life and trajectory, so well-located home can help you with that. So every week on this channel, I'm going to go deep on one specific piece of this market, specific neighborhoods and deal types and strategies for investors and buyers both. If you want to stay sharp on what's actually happening in Detroit real estate, subscribe now, hit the notification bell so you don't miss an episode. And if you're ready to make a move, whether you're buying your first home, adding to your portfolio, or looking at a package of properties, reach out to me directly. My brokerage is Simply Home in Ferndale, The number is 248-952-8547. I will answer my phone and I'll give you an honest picture of this market, even when the honest picture means you should wait. I'll see you in the next one.